Hey everybody, hey traders, happy Friday. Welcome back, final hour session, final hour of the day. Just going to take a quick peek at, got a little butterfly action going here. And let's price it out through Tasty, SPX, final, oh fudge, it logged me out. Okay, we have, let's go SPX here, trade for today, 61.15. So looking at this trade, then it went out 50 and 50. It's about $7 credit. That should be about max profit here. So we got another 55 minutes. 55 minutes. Come on. So hopefully this price just stays pretty chill. Here is where we're at. Big level on the SPY at 610 and just under the 6100 handle. So here's 6115. Kind of in a little mid zone for the SPX today. Didn't have a lot of directional flow at all. In fact, it was 35.42 for calls and puts, pretty evenly matched. Market had a big directional day yesterday. That was essentially the extent of our direction this week. So CPI, that was the major kind of catalyst. Go back to earnings in a moment here. Where are we at? So this week, here's an easy spot to work from. We had our CPI data gap the market lower and still proceeded higher. Last time we had the big gap in CPI was all the way back here. This was a CPI gap from January, and prices went higher to all-time highs. So CPI gap proceeded to all-time highs. That was number one for the year. And then this week we had CPI gap and then proceeded to poke the all-time high. This is number two. Now, I said this yesterday during my final hour session. I think the important thing right now is that this market is interested in being right here at these all-time highs and actually trying to go higher. So I say trying to go higher because I thought today's close and this week's close will be important to watch. But since we've had little to no directional push to the upside today, we have a holiday weekend, President's Day, markets are closed, limited trading next week, Tuesday to Friday, but we still have some earnings. No other major news that I'm finding. Let me double check. The PCE stuff on the Fed's not going to be till the end of the month. So let's go to next week. So the 17th to the 21st, we have a holiday on Monday. So bank holiday markets will be closed. We've got a cash rate out of the Aussie expected to cut rates. Okay, finally going to be some rate cutting from RBA. They held at 4.35 for a while. Employment news out of the UK on Tuesday. CAD CPI on Tuesday. We've got some Fed speakers on Tuesday as well. President Trump speaking. Joint interview along with Elon Musk conducted by Fox News. Okay. Well, most likely, I can't tell you the last time that when's the last time that a president speaking has been on an economic calendar? Anybody? Was Joe Biden for 4 years on there? Was Obama on there for 8 years? Bush? Nope. But here we are, President Trump speaking on Tuesday the 18th. With Elon Musk, I'm sure it's going to be about Doge. Is that good or bad? We'll find out. Is there money that's going back to the markets? Is the 13% of what they actually can shave off and try to find some efficiency? Is that going back into the markets? Maybe. Is that going to be an optimistic thing? Are people going to be happier? I don't know. Anyway, it's just this is the new normal. Like, we've got a president that wants to be vocal, and he's going to make some headlines, whether it's through Truth Social, whether it's through Twitter. Elon Musk owns Twitter, right? Or X. So anyway, yeah, he's speaking next week. What else? Cash rate decision out of RBNZ looking to cut 50 basis points. Okay, well, if the Fed is in a pause cycle, we've got other central banks that are cutting rates. Not saying that it'd be great to happen, but this could make the dollar still a little bit more attractive if they're going to be pausing rates longer than others. So the dollar's been hit pretty hard these last couple of days. We've had like a 2 or 3 day pretty shift downturn in the dollar. which I had said, watch for dollar weakness to be good for the stock market. So that did translate pretty nicely. I still think the dollar has some strong support in this like 106 to 105.50 zone. If the dollar is coming down into this level here, I could see the dollar catching a bid around support. So if the dollar ends up drifting down to 106 or 105.50, if we spot some type of bullish pattern on a smaller time frame, get into a buy zone, I could see us coming back up into those highs. So not looking to necessarily buy the dollar right now, but I did close out Aussie dollar longs. I'm going to manage some New Zealand dollar longs. Dollar CAD short has turned out to be a nice trade. I talked about this this morning in an earlier session. And I look, I don't know if I've got a bunch of currency traders that are watching these videos or watching these sessions, or got a bunch of futures traders or just a bunch of stocks options traders. But this is a classic game of why Forex can be difficult. And the same thing with futures and crypto, like depends on how you're trading. But for a lot of Forex traders out there, this is the classic game that the market plays. Look, I had spotted this high. We had a 2016 high and we had a 2020 high in the dollar CAD. I was long the dollar CAD on this breakout, right? So we were going, I wanted this trade. And I talked about this for months and months and months of how slippery this dollar CAD was, because I was trying to buy at this low that, never came back down. We had a little bit of that test there. So I started a dollar cost average with levels where I was like, all right, look, I'm going to buy this thing at like 135, 132.50, 130, and then take this back up to 140 or so. But it never came down that low. So I got one entry out of what I wanted to be like three, right? I wanted like three entries right here. I got one. But as I was adding, I waited for this breakout and then I stacked up my orders to the upside. I ended up building 10 positions to take profit at 144.80. But I know traders, the entire time this is going up, I had so many traders reaching out to me and saying, Chris, you think the dollar CAD is going to pull back? Is it going to pull back? When's it going to go bearish? I'm like, why are you shorting the dollar CAD? Like, I get it that at this level you want to short it, but when this thing invalidates, this is not the trade you want to be shorting. And this thing ripped up, right? So traders that are still stuck in that trade, you're probably still hating this trade, but it's looking a little bit better. It doesn't feel as bad as it did. But what this did is like classic price manipulation at this high. Look at this resistance. Look at this resistance. And when price came up to tap this, and this is actually a perfectly measured move. We have this range right here, okay? Break that out, and I conservatively measure this range. I didn't go to this high and go to this low. I use all this chunk of price action in here. And so this is not by accident. I had this box measured out months and months in advance before this trade was ever taken, but my profit target was right there shy of that high. Okay. Now, for traders that were looking to be short, right? For traders looking to be short dollar CAD, this is the tricky part about being a Forex trader, because here's why retail traders are liquidity hunts. Here's why retail traders are considered dumb money. Here's why retail traders, when you trade with too much leverage, you end up losing a bunch because you don't trade small enough to get yourself out of harm's way. And it is a classic example of manipulation. Watch. Okay. I closed out all my positions here at that exit 44.80. That was a pending order that I'd set. And I was like, look, we keep having these levels at 44.60, 44.60. I'm like, we're probably going to spike up and hit 44.90 or 4,500, and then we'll reject. And what did we do? We hit 44. This high was 44.85. So that's what got me out of the trade. We go down, we go back up, and then we go higher. We go to 45.18. And then we go higher to 45.95. And then we go up again to 45.60. So I know that traders that were looking to short this probably took and even a good entry, even an entry right here, and they put a stop loss right there. What happens? They get stopped out, right? And then if they get stopped out there, they get back in again and they put a stop loss above this high. And then what happens? They get stopped out right there. Now, ultimately, did price go the way you wanted it to go? Did it go down? Yes. And you had a great entry. But my point is, the games that these markets play at these big highs and lows, especially in Forex and futures, crypto does the same thing. Stocks can do it too, but look, trading options, you eliminate the wicks, you eliminate the lines in the sand that can be like just so disrupted and tested and manipulated, right? So I just think this is a really good example to show the best way that I could explain trading and having hopefully Forex trading be more successful would be if you saw this as a short opportunity. you got to look left on your chart. You've got to look left on your chart. And why? Because if you shorted it right here, this is not the best trade to say, I'm going to short it right there and put a stop loss just above this high. Because if I arbitrarily set a stop loss at 45.50, okay, or 45.25 or 45.80 or 4600, what's that actually in the way of? It's in the way of that 2020 high, and it's in the way of the 2016 high. And what did price do? Over a weekend, which currency pairs rarely gap, but over the weekend when we had another tariff stuff, we had DeepSeek and tariff stuff for 2 weeks in a row, what did price do? It gapped up in a big way and then completely flushed. So if you took a trade here, that would be a great trade one, but you also should have considered a smaller trade size and another entry at those 2016 to 2020 highs. So trade one and trade two both get filled. They can be small orders. They can be orders that shouldn't be big risk, right? You can stomach the risk in the drawdown based on a dollar amount that's comfortable. So if I get filled on two entries and this is my break even, let me dot this out. This is my break even. Okay, if I put same trade size, so let's say I put $1 here and $1 here. Well, now I'm filled for too many lots or $2 a pip, and this market fills me. Okay, and then trade two becomes profitable very quickly, and all of a sudden trade one returns back into profit. Now I'm up this much in pips and profit with a drawdown that would have been very manageable. Okay, so while this trade filled entry two, my first trade would have been upside down maybe about $170 to $200, maybe. Can you stomach a risk like that? If you can, take a mini lot. If you can't, take a micro lot. Trade even smaller, right? But to now be looking at the upside potential of this trade is now break even with two lots running, and now you're up 450 pips on a net position with a bigger trade size and just dabbling and testing these highs, you're up a lot more profit. And on top of that, you could have also taken entry one, entry two, and if you really like the trade and believe this thing's going to go down, is you could stack these orders, back down to this level or back to the halfway point of this range. But it's that's the if, that's the shoulda coulda. But I think at least learning from this high, like this is a good example of just learning how price can manipulate highs and lows and not finding yourself to be a victim of these constant spikes that the markets always give us, especially as a Forex trader, especially as a futures trader, especially as a crypto trader. Like this happens all the time. Okay. So it's just a good illustration that I don't get to see like a lot of textbook examples of how many like games the market can play with us. But that is a classic game because this thing went up 47.95. I mean, my gosh, that's almost a 300 pip spike on a weekend news gap, which never happens, right? Like that hardly ever happens in Forex. But this is also a good example of kind of a flash crash move simply because the trend that was prevailing was bullish. And that trend continued to blow the top off, flush out that liquidity, and then come back down to where the real trade actually was. This is just market manipulation, right? Crazy stuff, but good example. Okay, what about dollar Swiss? Dollar Swiss, I took my profit here, same thing, loaded up some trades, basically since 2022. I was longing this one since like fall of 2022. Ended up closing out for that nice little win at 9,200, which I'm super stoked that I got out of that trade pretty much right at the highs. But I've been in this trade for 2 years, so it was worth the profit for sure. But man, what a hold that was, for 2 years or so before I took gains early this year. But now there's no trade to me. I mean, I look at this as if we're going to go higher, then sure, this can break and go higher. There's a big pocket up here towards like 98 to 1.00. I'd almost like to see this go lower though. If this goes lower and range is lower, then perhaps we have another opportunity to buy low and then trade the range back up. So we can look at buying here, stacking up some buy stop orders and getting out there at resistance. So buy support, sell resistance, see how cooperative that range might be. There's going to be some games, like if it comes here and it like spikes the lows and then reverses and turns the other way, like don't be surprised by that. So I'm looking at buying low. I like it. Dollar yen, the dollar yen has been actually dropping because the dollar's been a little bit softer. The yen's been slightly stronger. Currency strength for today. We have New Zealand dollar stronger, Aussie stronger. Dollar was weakest today. Yesterday, dollar weak. Swiss and Japanese yen a little bit stronger. Interesting move. So China's been having a pretty good week. China's come back in a nice way. I probably was early to a lot of my China exposure like I was last year, but September treated me well, took some nice profits, reestablished positions. We're getting some of those secondary bumps on China plays right now. So Alibaba's up to fresh highs, Baidu's performing well, FXI, KWeb, CQQQ, HSI is doing well. Japanese yen's okay. I'm interested in this Japanese yen trade. I'm trading it through 6J, which is Japanese yen futures. I am looking to see, will this come down to maybe test this lower break low? If this is a potential topping pattern, then maybe there's a swing opportunity to get, short dollar yen. Maybe. Concern is that this is just more manipulation and this thing comes all the way back up. It gets back to the same high or the same high, and the Japanese yen just doesn't really give us any clear direction. If the Japanese yen gets that much stronger, by the way, and that becomes a basket trade, if you've got Aussie yen, CAD yen, Swiss yen, Euro yen, Pound yen, New Zealand yen, dollar yen, all lower, if they're all going lower favoring Japanese yen strength, that probably isn't a good sign for the overall economy either. There's got to be some type of risk off trading if we're getting Japanese yen strength like that. So I don't necessarily believe that the Japanese yen is getting crazy, crazy strong. We're probably not there yet. But at some point in the next probably 1 or 2 years, we're probably going to have another big wave of Japanese yen movements that I want to be kind of bracing for, prepared for. Okay. All right. What else is going on here? Um, okay. Oil. I should put like a defined risk trade on oil. I think should I cap oil? I don't know if oil is going to be driven down to the dirt or if we are going to have just like, I don't know, energy prices going up. Maybe, maybe not. This is hard, man. Like I really don't have a position on oil that I like. I took an iron condor that did pretty well. I sold a bear call spread here, sold a bull put spread here. Got in for 20 cents, closed out for 12 cents. I was going after 10 cents. I was going to take 50% of the credit, so I took most of it, about 75% of the profit. But anyway, I was thinking that maybe I put on a trade here that as long as oil doesn't make a big break to the downside, this one's okay. Let me actually look at a defined risk trade on oil right now. See how this looks. So CL, maybe going out just mechanically, 31 days, probably not far enough. 61 days, March, April, May. I mean, demand for oil should come back in a pretty big way. I mean, April, May might, I don't know, 30 days out. Let's see what it looks like. April, I just want to make sure April, like we've got to be below like $65. So I would say, maybe the $60 handle would give me some wiggle room. That's probably going to offer like next to no premium though. So if I did like a 61 by 60 by 59, and that's good profit. I'm obviously not going to risk that much. I'm going, how many do I have? Five, so 3 wide. Credit 30. I mean, no, that's not going to work. Yeah, I'm just not really willing to put that much risk on it. I think the trade is good. I'm just not going to risk that. Um, that credit is garbage. So if I did like $55, I'm not going to risk $3,000 to make $100. Although probability is high. I mean, 95% chance of profit. Not a bunch of buying power. It's a futures contract. But if I'm wrong, I mean, this would be using defined risk. So if I'm wrong and price is below $59, I mean, the nice thing is this is way outside the expected move. I'm sure there's some profit to be made here. But is it worth it? Let me see here. How much would it be if I did this instead? No. 56, 57. So that's making $111. Yep. So with fees and everything, ugh. Taking like $18, man. Oil. That's steep for one contract. I don't know. I don't like it enough. I'm really torn on if we get like the drill baby drill agenda and oil prices are vulnerable. I don't want to be stuck in some weird energy play. So I mean XLE is fine. Some Chevron, some ExxonMobil, some dividend plays. Like I'm going to stay out of this nonsense. I'm better in gold and silver and copper right now versus trying to dabble in oil. I'm going to stay out of it. Natural gas, on the other hand, this one's looking pretty good. I'm long natural gas. This should be up a decent chunk. So I took a diagonal spread on natural gas. The ticker was UNG. UNG is here, currently up around $2,400. This has only been open for about 30 days, 38 days. But I've got this one all the way out to 2027. So there's plenty of time in the trade. I still have a decent chunk of profits still come off of my sell side out to April. But as long as we see Uber's got a ratio spread. Didn't Uber have earnings this week? I think I made money on Uber with earnings. Yeah, we had earnings. Good. Stock went up. That's fine. Good for the ratio spread. Cool. All right, that's looking good. 314 credit. That was awesome, actually. So that trade right there should be worth about $300, and I'm going to let that one go mostly at expiration. That should not be an issue out to March. Uber 60 by 57.50. Right now, that is up around $1,500. Max profit should be about $3 and is trading for about max profit's about $3.14 is trading for $3. I don't have to do anything here. I could just take the profit and move on. That gives me still like $300 per contract. That's not bad. I'll let this one go over the weekend. I'll let this so we get Saturday, Sunday, Monday, and Tuesday. That extra time decay might help this one get down to single digits. So I can write that one down for next week to close out for Uber for profit. Okay, very good. Yeah, I'm not going to take. I'm just not really keen on the direction, man. I mean, I don't know if this wants to like find support and bounce off it. What I would rather do instead is rather than putting like a big risk trade on, would be if we come down to this level and we bounce, just doing like a simple bull call spread. So I could buy a call, sell a call, and maybe risk a couple $100. And if I'm right, I'm right. If I'm wrong, I'm wrong. But rather than having like the outlier, having that big risk, having that $2,000 to $3,000 max loss if I'm dead wrong. And I mean, I could roll it. I could give it and massage it a little bit more. But what I don't want to do is somehow be rolling oil in a freaking bear market. If oil's in a bear market, and I know it'd have to be a long ways to do it, but if oil broke those lows, I don't know if we're dropping, I mean, after a lot of consolidation, especially, let me check this workspace here. Carvana is running without anything. Let's go to oil. So let's go CL. And right now, yeah, I mean, we've got a little volatility squeeze here. So we got a little pinch. But I don't know. This could probably still range and give us a big squeeze. And at some point, like oil's going to have to either make a run higher or we do in fact go lower. So I bet we're still range bound. In all honesty, we'll probably be range bound. I think the better trade is if we came back to visit lows. I'm looking at debit spreads, bull call spreads. I think that's an easy way to do risk defined. I did it over here quite a bit, and I was risking like basically for every $100 of risk, I had like $125 to $130 reward, and those paid out pretty nicely last year. I didn't try to short it. I wasn't sure if we were going, higher, but I think if we have support that holds, then it's a good trade. All right. Let me do a spot check here. I'm still right in my profit trap on the old SPX. Got a little bit of profit running out of that trade for now. Okay, what else? That's oil, natural gas, still looking pretty good. Let me see if this one has a squeeze potential as well. UNG. A little bit. Starting to get some momentum. Not awesome though. I'm still bullish on this one. I think the first time in years, literally years, natural gas has gotten to a buy zone. So I get it. Like we might have to spend a lot more time carving out this big rounded low. But if we're up above this 200 moving average, man, just a nice little uptrend flow could be like really, really good. So I'm hoping that I can just stay out of the way, let the long call do its work, try to stay out of the way with the sell call, and eventually when I'm happy with the profits, just take profit. Gold had a pretty big dip today. So it's interesting to see dollar down and gold down. Gold is down 1.58%. Silver down 0.24%. Silver, I was looking for an outperformance on silver. I think a lot of it was based on this alignment. So XAU, XAG. Well, it was down further. I've got it better on this chart here. So looking at this high to low, if we end up breaking these lows, silver again looks a little bit better. So silver to me, I think technically is a slightly better trade setup. I've got measured moves out there as opposed to trading all-time highs. But I'd like to see this chart of gold versus silver continue to push a little bit lower. Now they can both perform fine. I'm actually interested, like what is gold down so much for? Gold positive for 7th straight week. Well, was it? I mean, it was barely. So, I mean, I don't know if that's profit taking. We didn't quite hit 3,000. It's not a round number. Like, it's not at a fib level. Like, just an interesting day. So, not the end of the month, not the end of the quarter. But anyway, I think dips are going to be bought on gold. I've just been patient all year. So we hit the 21, we hit the 50. Interested in looking for some aggressive dips. We hit the 100, the 144, the 200. Very aggressive dips. Would love to buy some of those if they're found. I don't know if they're going to get found. This has been a pretty dynamic bull market and very well supported for the last couple of years. Silver ran all the way up to 33 and change, pulled back today. I still think the posture on silver looks pretty good. We could be also building up a move like so, a little bullish pattern if we pull back in for some accumulation and then heading back up towards like 35 and change, $36. So if we end up having a pullback here, I will probably look at some other positions either at this 29 low or back down towards this 26 low. I've had some pretty good futures trades close out for profit back here, as well as these lows that have done pretty well. I'm looking at how far out could I go on silver, risk-wise, reward-wise. I like the SI futures trade. I think I could trade micro as well, but if I went out to April and I keep this below 26 bucks, this might be okay. So if I said, okay, 25.50 or 26.50 to 26.25, that's 200 and some bucks, right? So that's a debit. There's a profit trap. And then if I wanted to sell 25, 25.50 to 24. So I pull in no credit, which I don't love at all. That max loss is really steep. That's a little bit cheaper. Like where's the profit at, man? That's why I just think I have to wait. Like this is the level that I want it to be at. I just want to see if we pull back first. So if silver pulls back, I'll revisit that trade with a level here or revisit that trade with a level all the way down here. And just look to see, okay, so out of the way, income trade, maybe I can make like $300 to $500 for I probably say like a 95% chance of profit on that trade. If price goes up higher, I still have SLV. I still have SLV credit spreads. I still own shares. I might not do a lot on the future side. I just might wait. I won't really get overexposed. XNG, natural gas. I mean, it looks good. It's fine. I mean, I like being long. It's not something I want to own. I mean, $678 stock. I'm not going to own this unless you're comfortable with just allocating a dollar amount to it and buying like fractional shares. But I like where it's been. I like that we can make a run. We're in a pretty clean bull market right now. I think UNG is coming back in a big way. Hopefully, this will kind of cooperate similarly. So this one, I'm just doing a diagonal spread, it's a little bit cheaper. But yeah, that's a good one to watch. Yep, I'll actually add that to my watch list. So I'm just going to XNG and throw that in next to my UNG position. There we go. There. Gold we did. Really interesting day on gold. Futures down. I mean, this is fine. Look, honestly, like I would love a pullback. Give me a pullback. Let me get something. I'm gonna, get my hands dirty on something with a pullback. So there's past resistance. There's dynamic support with these exponential moving averages. Silver, same thing. Still dynamically supported off this 200 moving average and like dips to be bought. Higher levels to be measured. Gold is sitting at all-time highs. I mean, I think there's a pullback potential. I don't know how deep, and I'm not going to get super big on the trade size either. So if we pull back to this level, I'll probably add a small chunk, maybe $1,000. If we pull back to a between the 100 and the 144, probably the same thing. So like a 1K position there, another $1,000 here, and then anything on the 200 moving average, probably another 1 to 2K down here. Because I think this new all-time high is now a target. Even if we range, if I get big enough dips and pullbacks, I still like that potential trade. Percentage wise, it's not incredible, but I think a pullback into, I mean, if we get a pullback to 26 and we go back to highs again, that's still a 13% upside. It's okay because I can leverage that too. I can trade a lot of options on GC. I can trade some options on GLD and kind of stay out of the way and let price work. Bitcoin 97. Added some income trades this week on IBIT. MicroStrategy is up a little bit today to 339. This one I've got to trade out for next week. I need this either to get above 365 or down below 3. That's 305. Let me change this. So I'm going to go 315. So 315 is a bear put spread. And 365 is a bull call spread. And if price stays above 310, I get this called away in March for a nice little winner. We've already had earnings. I don't really want to go out too much farther, but the income is pretty darn good. Let me check on this real quick for a couple of these accounts that I have for MicroStrategy. So I have the shares. 365, that's the bull call spread. That's the bear put spread. It's the this one here, the 310 by 240 is my collar trade. So I'm out to April. It's out 62 days. I don't know if I'm going to roll this right now, but let me take a look. If I roll it out now, I want to fill in the blanks a little bit. So April to May is the only expiration. I want to get these filled in. So if we get like end of April, I might try to roll this for another credit. If we get into early May before I hit the monthly by monthly, I might roll this for a little credit. I'm in just 100 trades, so I'm looking at maybe a roll for $2, $3. $2 or $3 roll is fine, but nothing yet. So I'll wait on that. I still have some time in the trade. There's still 62 days left, so I'll wait. See if I can get the late April for a roll. Coinbase had a nice little win on Coinbase this week. We had a run up to a liquidity level at 300 that tapped it, and then earnings actually popped lower. We actually beat earnings on top and bottom. Market itself didn't move much on Coinbase. This might be, let me see what this would offer up for some type of aggressive iron condor. If I went out like 42 days, and this might not be a great trade, but I'm gonna look at it. So I got out of the trade here. I'm pretty sure I'm all out of Coinbase, other than ratio spreads. Yep, those are all ratio spreads. Totally fine. Okay, let me look at a iron condor trade. So if I got 42 days, look at a 15 delta on the call side. So if I did a 365 or 370 by 390, go 20 wide there, and then a 15 delta, got a 225 by 205, and I get 393. Max loss is $1,600. It's not a terrible trade. Put side is a little bit vulnerable though. I mean, 460 premium versus 470. I mean, it's fair. Like the premiums actually, we're not getting the big pricing skew like we had the last couple of months, where puts were way better premium than the calls. But the issue is look at the strike difference from the expected move. The call side, I am way higher up on the call side to get that premium. So I guess that being said, with the expected move, the 15 delta, that's so different. That's so different. Anyway, we already had earnings on this, so I'm wondering, where's my downside here? It'd be like 200 something. I think I might take this trade actually. So that's 397, 225. I mean, I could take assignment here. I actually wouldn't mind taking assignment here because if I own Coinbase, it's pretty easy to repair if I own this thing at 225 minus the $3 in credit. So if I get assigned at 225 minus the 380, actually, you know what? What I'll probably do instead, let me do an ownership price that would still be paid for, and I can do a bear call spread and not take on any risk. Well, not risk, but let me do what's the spot that I'd be willing to own it. If I did a gap fill at like 200, let me sell a put at 200. If I sell a put at 200, I would 205. So a naked put at 205 is gonna set me up with a $2 credit. So if I can do a bear call spread on top of that, this is a Jade Lizard. So I'm gonna go 70 by 80 or 70 by 85, 70 by 90. So what's my risk? My risk would be $2 here. That can't be right. So I'm getting more credit, but I obviously don't want it to go above my bear call. I've got to keep that pretty cheap. So I don't know if there's a way that I can do that the way I want to. I'd have to manage that. I could roll my puts. That's actually probably the best way to do is roll the puts up. So this one would have to be capped at like $5 wide, and then I can roll my put. Let's see what this looks like. 250 for a 14 delta. It's only out 42 days. It's pretty simple. I could also take the profit on this bear call spread and let the put just exist. But if I get assigned, it'd be an assignment at 205 minus the 250 that I collect credit wise. It's not a horrible trade. I mean, I'm looking for a lot of income opportunities here. $200 would be like I'd be okay with that. I've got some ownership opportunities down here. That might be the better trade, honestly, rather than trying to call these stupid tops. What's the high side of this trade? 375, 380. It's like we'd have to have Coinbase hit all-time highs again. Like the odds of that happening are pretty slim, I think. Anything can happen, but I'd say pretty slim. So how much do I like that trade? Gold, yeah, it's down today, Ted, but I think it's just due for a pullback, man. I'm excited that gold's pulling back. I'm ready to buy some dips. I just want some better levels. I've been talking about, waiting for gold to pull back for months and just hoping for a pullback, and we're actually seeing some action. But I think it's going to stay pretty well bid. So I like gold with a better entry. What I'm pricing in right now is a potential to the strategy be a Jade Lizard where I'm doing a bear call spread and a naked put. But I almost think if it's a better trade based on this in March. Okay, March right now is a 42-day expiration. That's kind of like perfect wheelhouse here. Let me craft this a slightly different way. I am willing to own if it came down. I'm not willing to short the stock if it goes up. So let me look at perhaps a 225 by 215 by 205. Maybe there. So I'd have a nice little $5 trap. The assignment risk would be maybe 7%. Probability of profit 87%. Premiums are okay. I'd own at 205 minus the 136. It's okay. It's a, yeah, I'd like to see a slightly higher pop in this trade. Maybe work this down a little bit more. That's better. So I can still make $100, assignment at 195. Now I got a 91% chance of profit. Willing to own the shares. If it came down below 195, I'd own it at like 189. 189 right now has about a 4% chance of assignment based on current mechanics. 189. That would be a gap fill down here. That's okay. That's okay. I've got like this one is expiring next week. This one's pretty much full profit. So that one's off the list. This one is out to April. I'm willing to ride that one out a little bit longer. I wish I could get better premium on this, but I think mechanically the trade looks okay. So doesn't take up a ton of buying power. Maybe go up one more strike. Is it worth it? Not really. So that's fine for over $100 income. It's only 42 days. Anything out in the April expirations, April 4th, I could probably sneak in one in April 4th. I might do that. All right, so I'm going to take this trade for March 28th. See if I can get a $1.15 for this. Okay, so $1.15 is not filling. $1.10 is the mid price. $1.14, $1.13. Hopefully I get a $1.10 or better. $1.10, come on. Dagnabbit. All right. 105, final offer. We've got about 13 minutes before the close today. All right, just got filled at 108. Okay, 9732. There we go. All right, just getting filled on these trades. This one, 7336. Good. Okay. So I'm going to get this one added in. This is coin for little income trade. And I think I might replicate this one and do the April 4th one as well. So this is coin, 328 expiration. Buy the 205 put, sell the 200 put, and then sell the 195 put. Got filled for $1.07 credit. Willing to own. If assigned to be 195 minus the 107. So 195 minus 1.07, I'd own it at 193.93 with also a $5 profit trap. So my max credit could be, and that's a tough one to call the profit trap. Like that's probably not really the plan here. The plan is mostly if I'm assigned, my cost basis, actually my cost basis is way lower than that. 195 minus 5 minus 107, 188. That's my break even. 188.93. So that should be pretty straightforward to repair. Now I'm going to go April 8th expiration. Let me see if that's the next one. Try to sneak this trade in the next 10 minutes. So March 28th is filled. April 4th. There we go. April 4th. See what these ones look like. So April 4th is out 49 days. Similar trade. 1, 2, 3. Same trade. Similar mechanics. 93% chance of profit. Willing to take on the assignment. Maybe a slightly bigger profit trap here. So I get a profit trap up a little bit higher. Crazy how that changes there, isn't it? 220 by 215, 195 would be my naked put. That's a 6 delta. I like this trade. Well, now I don't. I thought it was $1.50. Now it's $1.03. Son of a bee. What the heck, dude? These are all. I think it's just because it's like last 10 minutes. These option prices are a little nasty. All right, I'm going to revisit this one for Monday. So coin, looking for an April 8th. Nope, April 4th. April 4th trade. I'll come back to do that one on Tuesday next week. So unless I can get this one to fill, that's not bad. Still have a bear trap, have a put. I don't think this is going to actually fill me though. This 195 is only offering 57 cents. Why am I going out farther in time and I've got to go higher in price? Doesn't make any sense. So let's try this instead. I don't know, man. These prices are way off. I think it's just late in the day. I'll come back and look at this trade on Tuesday. All right, so I got one trade in on Coinbase. And that's going to help me hopefully add a little bit of income here. That is a March 28th trade. So March 28. So it's a 205. Buy a 205 put, sell 200 put, sell a 195 put, $1.07 credit. Willing to own, that'd be a 188.93 break even. The other ones are, I mean, honestly, they're way better. I was doing those 111s when price was down here. And when price fell, I was doing those trades when price was falling. I put both those out to February and April. So I was able to get the trades way lower in the strike prices. This one is okay. It's okay. We're still pretty well supported. I mean, if we got dynamic support, this is just going to be, like this accumulation zone on Coinbase and maybe Bitcoin in general. Like this accumulation is probably good. It's holding here and trying to get back to revisit highs again. So as long as we're not making some freakish move to the downside, but even if we filled here, if I own stock, I could turn that for a profit. I'm pretty confident I can turn that for a profit. Okay. So anyway, I'll look at that one. Tesla. So somebody asking about Tesla. Tesla is, I mean, I'm accumulating Tesla. I have a small chunk around the 400 handle, another chunk here at 362.50. I've got a pending order at 285. I've got a bunch of ratio spreads for February, March, and April. April and May, in fact. So I like Tesla. I think that it is, it's due for a pullback. I'm glad we're getting one. I wouldn't mind seeing this thing kind of settle in for an accumulation zone between like this 300 and 270 area. But on the right-hand side of this trend line, Tesla probably looks a lot better as far as catching a bid and sustaining some type of like new uptrend. Until then, this is just a pullback. But again, good support around the 144 200 moving average. We had a little pop off of that kind of 100 break this week, but that is not good enough to say like that's the bottom. So if we came down a little bit lower and then break back above the 200 and then get on the right-hand side of the trend line, I'd be more inclined to say like that is a pretty strong bottom that we could trade off of. So that'd be my plan, Tesla. All right, so we're going to go into an extended holiday weekend. Markets are closed on Monday with President's Day. We're sitting here right at the all-time highs. Next week's going to be a very interesting week. Is the market excited about this week? Or did we just have like a bunch of manipulation because of inflation data being high, but the market's like, let's just push crap up anyway, and then we'll flush it down next week? I don't know. So I think that this is an important week to watch. I mean, every week's an important week to watch if you care about your capital. But we're sitting here at all-time highs again. This is number 2 for the year on the S&P. Is next week going to get us above this, consolidation? We're looking for some type of volatility expansion. If so, can we go higher? Or is this a flush up to flush down and we're right back in the middle again with more indecision? This is still a big fat gap that could get filled in that CPI from before, right? That was a CPI gap right here. And the market ran with it, but then we saw a lot of indecision. Can the market come back and fill it? If so, that's going to put the brakes on this kind of all-time high discussion. But we get to hang out Saturday, Sunday, Monday. There's no markets open. I'll still run my classes on Monday morning. We'll just talk strategy, and then Tuesday, back to the grind as usual. Okay? All right, I got a couple more minutes here before the end. I need to see if price can stay in the 61.15 zone. So far, so good. This would be trouble at 61.20 or it'd be trouble at 61.10. We're hanging tough. Oh, there you go. My price just, there we go. We're pretty perfect. So far, this is pretty perfect. $7 credit traded for 365 right now. So a little bit of income, final minutes. Like this crap gets really sensitive here. I should just take the profit and go. But I mean, if I can cash settle it for a couple $100, that's cool. Pin this thing at 61.15, that'd be even better. But I'll wait. What's the logic that markets fill gaps? Just efficiency. It's not self-fulfilling. No, there's stocks that have had left gaps in the wake for months and months and months, years and years and years, never looking back. So, I mean, if you're a forex trader, gaps are getting filled most of the time. But in stocks, I mean, when you've got earnings and opening, closing bell, you got overnight movements. Like it's just index wise, it's like you got the futures market, right? So you got like pure price action, 23 hours a day. When you're looking at like ES or NQ, those fills are typically like that's your price action, and then you piece together the gaps on the SPY. But my point is from like an open to close, and then an open the next day or open the weekend, it's like those gaps are just efficiency points that the markets come back and find. But it's definitely not self-fulfilling. I would not, bet the farm on these things filling gaps. So, this, if anything, this could be, if this right here, this gap from CPI, if this gap is not filled all the way, I could still just see like if we don't break these, I mean, if we break these highs, I'm probably not going to be surprised. I mean, we fought this hard to basically, overcome DeepSeek, overcome tariffs, overcome higher inflation. I mean, overcome higher inflation. Like the market didn't give a crap about inflation when it ripped up to all-time highs. So why is this week's higher inflation any different? You know, so we're just right on the cusp. And if we break higher, I would not be thinking about that gap until this market actually shows that its price action is starting to drive lower, and then it's like, okay, that gap fill's probably going to happen. You know, but this would not be like I would not be a bear forcing that thing to fill a gap when we could just be looking at stalling and then breaking new highs and going into some type of bull flag. 111's fine, Penny. If you're doing the call the put side on the bottom, if your final put is if you only have 3 legs in the trade, then that would be a 111. So it'd be buy put, sell put, sell put. That bottom one is a naked put, so that would be a 111. Sometimes I put it in as like a wide credit spread. So I could do a trade like this where I would buy a put, sell a put, create a little profit trap, and then sell a put and buy a put and create a wider credit spread. So this would be a debit, this would be a credit, and then the wider the credit, I can take this thing as a net credit. But I do that for buying power reasons, right? But I'm just going to use my margin accounts for that Coinbase trade because I'm actually willing to own the underlying. The other one's not so much. If I had to do it in an IRA account, I'm not going to drop 20 grand. Although I can probably take it. I mean, I've got enough capital here. That account could take it could take a 20 grand assignment, but I don't want it to. That one would be fine. This one, like, no, I don't want to own any stock there. So, I mean, I just don't have like all the awesome buying power for my IRA accounts. So these are all IRA accounts. I'm not going to take any assignment on that one. So I'm just going to stick with the margin accounts for the Coinbase trade. Yep. All right. Final 2 minutes. All right. 6115 would be better. That's what I sold. Trading at 117. This trade initially was traded at $7. There we go. So I got a little bit more margin for error here. I trade this one around $7. There. That's what my trap actually looks like. So it's looking pretty good for these final couple minutes. Probably going to get a cash settlement for a couple bucks. Got 1 minute, 61.14, $1 off my pin price. And then I'll unlock this at the end and see where we're at. Don't jump around too much. Yeah, they're good. Perfect. I got a settlement 6113.74. So that should be $7. $7 minus 1.26. So that should cash settle for about 550 bucks. That's a good little profit. That's a good little profit for a trade that's been open for maybe an hour, hour and a half. Not bad. But there's risk. But I'll take that towards the end of the day. Yeah. Yeah, Penny, if you got the cash for it, I mean, look, Coinbase is not a bad stock to repair. I think if you're in the camp of liking Bitcoin, if you're long Bitcoin, ways to diversify, ways to dollar cost average. I mean, MicroStrategy is probably going to be the wildest trade. IBIT is going to be the thing that is cheap enough to reflect Bitcoin, but not actually Bitcoin. It's just the securitized version of it. Coinbase is a broker that supports all crypto transactions. Coinbase wallets are opening every single day. They have millions and millions of users, and that's impressive. However, it doesn't quite trade like Bitcoin, right? Like this is a bit more volatile, and I don't know if they're losing on revenue. I mean, they beat earnings this week, which is fine, but I wasn't sure if the headaches are like, well, everyone's just buying IBIT now, and they don't really trade the same way. Because before it was like the starting point was you got to do all the fancy stuff like having your little thumb drive and your 24 passwords and have a cold storage wallet to then Coinbase could open you a wallet. And then there's Coinbase and Coinbase Pro and you can trade crypto. But now you can do all sorts of fun stuff. There's like Sapo Bank, there's River, there's Swan, there's like other ways to dollar cost average into Bitcoin. So I'm just thinking there's competition here. So it's not infallible. But I do like the structure of it. If Bitcoin is going to, get back to highs, I would think that Coinbase can also support that. So having, this run to this run, finding some dynamic support, it'd be nice to see Coinbase continue to head higher. So I'll take my chances. I'm trying to stay out of the way, generate some income. But if you got the stock, I mean, the nice thing about Coinbase is if I went out, 30 days or so, even a couple weeks. I mean, if I'm out 21 days, an at the money call is worth like $16 to $18. So if I took any ownership at like 190 bucks, within a couple weeks I could lower it to 175. Another couple weeks lower it to probably 145, 150. I mean, the amount I took an ownership of Coinbase one time at 165 and worked the cost basis down to like $55 in about a month and a half, just with options. So, I mean, as far as ownership goes, like it can be a very easy stock to repair, and I'm not saying I'm trying to hold onto it for, 30, 40, $50 of upside, but I could comfortably repair this thing for maybe $5 or $10. And that would be the intention is if I tied up 20 grand to make 2 grand, okay, fine. I get 10% return on capital. It's fine. Right. So, all right. Happy Friday, everybody. I'm gonna let you go. Thanks for being with me. Enjoy the weekend. I do have some classes on Monday. We'll just talk strategy since the markets are closed, but have a great Friday. Good stuff overall, service wise. I posted this in my Telegram. Daily profit play this week. We had 7 winners. Double ups had 2 winners. Newsbreakers 9 to 12. Waterfall income. Actually, fudge. You know what? I should have reviewed that. It's fine. I'm actually in profit on a bunch of those trades. I just didn't close them out for the partials, but I will review that real quick. See if I can get. So XSP were the 2 that I took this week. We've closed out all but those trades. Nope, I've got an SPX trade as well. Okay, so I've got one out to April, and then the ones for March. Let me check these real quick. So XSP right here, 581 by 580, 581 by 580, 550 by 530. So got in this trade for 48 cents, trading for 30 cents. If I wanted to take that partial profit, I could. 30 out of 48 cents is a 38% winner. If anybody in Waterfall Income wants to take profit on that, we can next week. I'm just going to sit on it for my full credit of mostly full credit. If it's trading from 48 cents down to like 10 cents or 5 cents, I'm probably going to take the profit. The 53 cents if it's trading for, 45 cents or 50 cents net, like I'll probably take the profit. So anyway, we'll talk about those next week on Monday. Let's see here. To do that, wide and lower credit spread just equal 205, 205. You have to sell. Yeah, I get it. Yeah, you're gonna have to go quite a bit wider. So you probably have to go like a 5 wide debit spread. Probably has to go like 20 to 30 wide credit spread in order to get maybe 50 cents or a dollar. So you can play around with the prices. All right. Happy Friday. Happy Valentine's Day. Have a great weekend. See you soon. Bye.